The CBA is predicting a 10% housing price drop. Has property peaked? Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your morning stein of coffee, and I want to have a look at another article about another bank predicting another drop in housing here in Australia. 10%, they think they've got it down to the month. Now remember when the RBA was modelling the impacts of a 40% drop in housing on the Australian economy. Remember when we were reading article after article about banks predicting a 10%, 15%, 20% fall. And then what happened? Well, we went into our first recession in 28 years. Government got worried, started intervening in the economy just a little bit. 5% guaranteed mortgages. Then APRA was allowing the banks to give people mortgage holidays. It's a huge amount of people on mortgage holidays, everyone. Then you had 2% guaranteed home loans appeared. You had government just racking up debt upon debt upon debt. You had home builder, remember? 15 grand, 20 grand, free money for people. And everyone screamed, oh, we need social housing. They don't care about social housing. They don't care about little Jimmy getting an extra pool. They care about getting money flowing through the economy, and that's what housing is. Don't forget the wealth effect, everyone, as well. Literally, I was talking to a neighbour yesterday who was in our area thinking, oh, wouldn't it be nice if housing goes up? It'd be worth more. I go, but it's not going to make any difference to us. We're not going to sell. It just means on paper we feel better. And then the wealth effect will hit. You go buy more crap, and they pretty much admitted to that. So let's have a look at this one, everyone. So CBA is predicting a house price drop of 10%. Now, is this the big crash, the correction that people are waiting for to time the market? Well, no, not really, guys. Because housing's just gone gangbusters. Literally, it's just gone gangbusters the last 20% growth this year. It's just insane. This is where Australians are jumping into for security. And it's part of our entire culture here. It's a cultural phenomenon to get into housing because people only know good times. So let's have a look. The Commonwealth Bank believes house prices will tumble 10%, and it thinks it knows exactly when this will happen. CBA's head of Australian economics, Gareth Arad, said he expected property price growth to moderate in the first half of next year, but 2023 will see a drop. So they're thinking it's going to cool next year, which this seems to be the agreed upon opinion from a lot of the banks and commentators at the moment. We're going to cool off this year, or it's already started to cool off now, particularly with what's going on to the market and auctions getting passed in. And we're going to see then, as interest rates go up from our cash rate at pretty much nothing, we're going to start to see housing taper a little bit, cool off. People's ability to jump in is going to slow down. But remember, don't forget, we've got calls. We need those 400,000 additional migrants every year to help fill the labour shortages that we have here in Australia. I mean, why would you work in Australia, guys, when you just get into housing? So we expect an orderly correction in home prices of around 10% in 2023 as the RBA takes the cash rate to 1.25% by the third quarter of 2023, he said. The third quarter of 2023, or Q3, begins in July and goes until September. Arad said house prices will be dependent on the RBA's cash rate decision, which the CBA believes would rise sooner than initially anticipated. Well, that's why we all locked in our mortgages, isn't it, everyone? Arad said he expected the RBA to start increasing the cash rate in November 2022, but in the meantime, house prices would continue to rise. November's a long time. So in a year, they're thinking the cash rate will rise, and until then, a year's a long time to be making a prediction, everyone. Well, a lot can happen in a year. Remember, we've got an election. And, what kind of, good treats of handouts do you think the government can come up with before the next election? 2% guaranteed mortgages, forget that. We'll give you 1%. He said house prices were expected to peak next year at around 7% higher than this year. The Australian housing market is in the twilight of an incredible boom that has been fueled by record low mortgage rates, he said. Well, not just mortgage rates. Also, people have been forced to save. You've had lockdowns. You've had... here's the thing, everyone. Australia is a two-speed economy, guys. We're a two-speed economy. I'm going to bring up, well, this chart here to show you the differences in income for different households. You've got the highest, over $2,000. Middle, just under $1,900, and the adjusted lowest income of $433. This is the K-shaped economy here. This is the two-speed economy. This is why you have so many people that don't really see a problem with housing. You're on $2,000 a month. You're not, $2,000 a month. Oh, sorry, $2,000 a week. You're in a much better position than someone on $433. Who do you think has more political lobbying power anyway? So you've got people that are forced to lock down. All this money that's spent on holidays, spend at cafes, spend out. Boom, okay, boom, I suddenly got my deposit. Oh, look, the wife and I each got $20,000 out of our super. Oh, we suddenly have a house deposit. Wouldn't it be great if people weren't forced to invest their money before they were ready for it? So, the phenomenal lift in prices is not over yet, given dwelling prices are still rising briskly in most capital cities. But near-term indicators of momentum coupled with the recent move higher in fixed-rate mortgages suggest that conditions will moderate from here. Could this be the end of the property boom? According to Arid, yes. So, he's calling it that we're peaked. He said there was actually a simple explanation as to why. The price that someone is willing to pay for a home is predominantly influenced by two things, income and borrowing rates, he said. As home prices move higher, affordability becomes stretched. That can be improved via a reduction in mortgage rates or higher income. But at some point, the tailwind of lower mortgage rates on prices wanes unless there are further cuts in interest rates. In addition, Arid said a lift in population growth as the international borders reopen will boost the underlying demand for bricks and mortar, particularly inner-city apartments. As such, we expect house prices to decline by a little more than apartment prices over 2023, he said. When will interest rates rise? Arid said the bank was expecting the RBA to gradually increase the cash rate to 1.25% by July next year. The cash rate is forecast to lift because the economy will be fully employed and annual wage growth will have pushed to the desired level of 3%, Arid said. Stronger wages growth will provide a partial offset to rising interest rates on the property market. So, there you go. Let's have a talk about this one. So, we're seeing a potential housing correction in 2023 of 10%. But you've got to remember, it's on the back of years of crazy growth. Over 20% this year, 6% next year. We're still not going to be back to 2019 levels. So people who were trying to time the market, you're kind of screwed. Will it correct even further? Will these interest rate rises push people over the edge and force them to sell? I don't think so. We've heard the drum beat of people at mortgage stress, people at risk. And I've got another article we're going to go through later today where during the recent lockdowns, mortgage stress was lower than before the GFC because the cash rate's so low. People are saving money. Here's the thing, guys. We've got a two-speed economy. You've got some people who are doing better because of the lockdowns and the pandemic than others. So sure, we may have some that are tipped close to the edge that may be nudged to sell, but I don't think we're going to see a catastrophic complete plunge and crash in the property market, guys. And it's not because I'm in love with property. It's not because I'm a property spruiker. It's because I'm not a perma-bear. We've seen now the amount of government intervention that they're willing to do to support this sector. We've seen that this is the method they use to stimulate the economy. They're giving people 2% bloody more deposits. And once you get in, even with a 1% increase in your interest rate costs, you're going to find a way to make it happen if you're a homeowner. Okay, you're going to find a way. And people, investors, these aren't stocks. They're not going to jump out of it real bloody quick because it's a pain in the ass to sell. To get in and out of property is a lot of effort. We're not talking crypto. We're not talking the stock market here. There's costs involved. So that dulls the desire for people to get out. That means, okay, we'll take little Jimmy out of private school. We'll cut this cost here. We'll stop doing that there. Okay, honey, we need to cut back on the spending. We need to put more on the mortgages. I can see that happening before this rampant crash. And then, because remember, it's slow. All that has to happen is people need to have enough liquidity buffers. They need to have enough ability to squeeze more money out of their renters and to cut their costs just to keep going until there's new round of government gimmies when mortgage keeper materializes into something. Is it fair? Is it not screwing over future generations? No. Definitely is. That's Australia, guys. That's Australia. What can we do about it? Well, hopefully, at the next election, Labor may come out with an alternative, but they've lost the plot there. They don't have the guts anymore. They lost the last election. We're not going to see it change. It's going to have to be a multi-generational shift. Maybe once the boomers pass on their wealth to the next generations, we'll see, but I don't know, guys. I really don't know what the solution is to get off this roller coaster. We need to get off this addiction as a country. Maybe we need to get some special economic regions where we slowly decant off the... Here's the thing. People use property to mitigate their tax. It's the easiest and reasonably sensible way to mitigate your tax. We need to get off that addiction. We need to find other ways to mitigate taxes, or maybe we just need to reduce taxes. So we need to wean off our negative gearing addiction, which is pumping up housing, and, well, maybe offset our income taxes to kind of counterbalance that, to de-incentivize people from using these as a mechanism to reduce their tax. Because this, going back to that chart, once you're at a higher income level, you're pissing away so much money to the tax man. Why not chuck it in a house, negative gear it, make a bit of a loss on it, so you put a dent in that anyway. You don't really care. You're going to lose the money anyway. You're going to give it to some government that's going to go and piss it up against the wall for some stupid program that you're never going to see any benefit of. Why not? Why not? So that's the long term. We need to get off this addiction, guys. Until then, I can't see the a cataclysmic correction happening. There's just too much political will to keep it going. I know it sucks, guys. What do you think? Check out this last video I did about the last rate rise prediction. Well, actually, you know what? No, you know what? I'm going to find the RBA prediction of a house price crash of 40%. We'll put this one in there. Let's go some retro and have a look at their modeling there, so we can see what actually happened. Take care, guys. I'll see you next time.